Right now, I'm more in a hold position. I guess because it's the Feds are putting a lot of money into the market, so it's like a high inflation.
Hmm.
So that's the part with the market right now. It's just a lot of inflations in there. So it's like once it catches up, then people are
Hmm.
not going to like. So I
Okay.
figured, as I'm looking about, if I see a good company, which okay, yes, is trading under its value, then yes,
Hmm.
I'll get it and I put it in the group. But yeah, just right now, it's everything's very high in inflation.
Yeah,
So
yeah, yeah.
I'm not gonna. So a good strategy as well is to, if you don't see anything, just be patient and just put away the cash. When the time
Hmm.
comes, then you'll have the advantage, and you just
Hmm.
buy out the stock or your choice.
Hmm. Yeah, yeah, totally.
Hmm.
So,
How about yourself?
yeah,
But I mean,
one
if
thing I was, go ahead.
if, if you do know forex, then yes,
Mhm.
it's might say go play on forex for a bit. But I don't know forex.
Yeah. So, I would say these days what I'm doing, I'm mostly day trading
Okay.
because, yeah, I don't want to hold something for too long,
Hmm.
especially when we don't know there is like sometimes bad news and it looks like the market, looking at the Dow Jones, it looks like it's gonna go down. It's just trending down, right? So,
Right.
yeah, I don't really feel like holding something for too long. So,
Hmm.
yeah, otherwise I'm also looking at the reversed funds. So, like
Okay.
SQQQ and SDAO as well. So everything that is going against the market, see if there is
Hmm.
some great opportunities. And I'm day
Okay.
trading them as well because we never know, like if there's so many uncertainties and yeah, everything is
Yes.
strange. Mm.
Yes. As wait, is Michelle talking?
Oh,
I
I'm
see.
back. No,
Oh,
no.
okay.
Oh, okay.
Sorry.
No problem.
Yeah.
I see. I do see on the market right now. It's
Mm-hmm.
more of a day trader's game right now. How the
Mm-hmm.
market's how the market's heading right now. So yeah, it's more like, hey, pop your head in, grab a cookie, and leave.
Yeah,
That's
yeah, yeah,
that's
totally.
what you that's what you want to do. I
Yeah,
mean, so yeah, that's the strategy
yeah.
to do. So yeah, I really find that I did a bit of um day trading when I first started off. I was trading, flipping all this stuff, and then I started to, as I gathered more knowledge, I started to realize what style fits me better. And I
Mm-hmm.
think that's really what comes down to is your style usually is somewhat a part of your personality. So if it
Yeah,
matches
yeah, yeah.
how your personality lifestyle is, then it's comfortable for you, and then you'll be better at it because it's like a part of you.
Yeah, yeah,
So
totally.
I started to get more into long term stuff,
Mm-hmm.
holdings for like 2 years and sell them off, and so I've made more money in that manner.
Mm-hmm.
So just from as I read about, and especially as we're going to talk about the dividend stocks or whatnot, is really just picking out a company and seeing what they're about, and
Mm-hmm.
really it's really looking to the financials. Like if you're an
Mm-hmm.
accountant, you would be good at doing some investments because you know to read the charts and
Mm-hmm.
you can see that they will post information. They'll post their financials, but if you understand the finances, you'll see how companies always skew results.
Mm-hmm.
So if you really know the finances, then you'll realize what they're doing, and then you can get a true sense as to, is the company doing that well? That's what they said, or are they just covering stuff up?
Mm-hmm. Yeah, yeah.
And then I will say, okay, this seems pretty cool. And then I'll look at the pricing, and I also look at their dividends. I'll look to say how long have they been paying these dividends,
Mm-hmm.
And if it's looking good, one thing with companies that also pay dividends is that if the company has been paying dividends for over 25 years and it's aristocrat, whereas and it's been increasing within those 25 years. Whereas if it's been paying dividends for 50 years and increasing, then those are called dividend kings.
Mm-hmm.
So I more like those sort of companies where they weather lots of storms. Within
Mm-hmm.
25 years, there's been multiple crashes, and they weathered it and still managed to keep on top.
Mm-hmm.
So in times like these now, those companies are they're pretty stable.
Mm-hmm.
Um, One thing which we're seeing right now in a shift is also with advertising.
Mm-hmm.
If you notice how Facebook is taking hits, and as this coronavirus sort of came about, because I was even thinking at one point to say, maybe I should, do a bit of advertising on Facebook or so to get my art going or whatnot. But then I
Mm-hmm.
looked at it to say, well, if everyone's at home and they're losing jobs and so forth, I said, I don't know if I want to do that,
Mm-hmm.
right? And as you see in these other companies, they sort of caught on to what I was thinking prior, and they said, hey, why are we advertising so much when people are spending so much? There's no need to push it so much. So then, yes, they
Mm-hmm.
start pulling from Facebook or whatnot, and so it's sort of like having that insight. And as you mentioned in the other prior group meetings, is with the industry that you want to get investing, is to really understand it and be able to have some foresight into it. To say, this is happening. How can it affect the industry which I'm involved in? And you'll be able to foresee a bit more, turbulence to avoid.
Mm-hmm.
So I guess right now, yes, Facebook goes down, but it's a big company where they're not going to disappear. And so I would just watch over the next few days, and if it's a company which there's some people that are interested in, then yes, I would
Mm-hmm.
probably set a point, research it, and understand it to say maybe it's trading at, I don't know, let's say 150, and you look into it and say, this is really worth 140, and just sit tight and wait around, and when it gets to that price point, just jump in and pick up the shares.
Mm-hmm. Yeah, that's good. So I would say like since we are actually a small group, I would like to ask anyone, like everyone in the group, if someone has something that they would like to know, even more like of something that is on the market right now that we can take a look at, that would be great. Or a stock that you guys are watching that we can analyze together or something. So yeah, I think that would be great, right? So I don't know if anyone. Okay, there is one BPY. So I don't know. What do you think, Josh? If it's
Mhm.
great, I would go with that. Like just basically go over the some stocks, right? Maybe those are great opportunities that we can all benefit from.
Okay, so let me see here. Give me a second. Let me pull it up. Uh,
First of all, I would like to ask you, Janelle, where did you find those stocks, and why are you interested in them? Like just something quick answer. Okay, so really like dividends, right?
mhm. Yes, so Brookfield is a good stock to pick up. I was also looking at that one as well as I was doing a bit more research into them, and
Mm-hmm.
it's a well managed company, and they have a good dividend history. That's one of the key things which you want to look at when you're going into dividend stocks is you want to really look at the management to understand who's running the ship, how they've been running for the past years. You also want to look at how long have they been distributing these dividends and seeing the consistency of increase in these dividends. And so as you look into this company and this is the management looks good, you look at their financing. That's another important thing with dividend stocks is that you want to ensure that the company has a good cash flow. If it has troubles in cash flows or whatnot, usually the main thing they want to do is they're going to cut the dividends. And usually for a company, dividends range from 35 to about 55% of the revenues they give back to the shareholders. So if they're having trouble with the cash flow or they have a high debt ratio, then you can probably expect a cut in the dividends. And that means that the company's not being managed very well. So you definitely want to keep on the lookout for that when purchasing. Back to the Brookfields. Yep, as I mentioned, that they're a good company to get involved in. And as the the numbers are starting to go up a bit, it causes some panic in the market, which will create an opportunity to pick up this stock here. And one thing about the dividend yield is that I'm not using exact numbers, but let's say the Brookfield is trading at $13 and they have a dividend yield of 8%. And so let's say every quarterly they pay 23 cents. So let's say now that same stock goes down from 13 down to 10. Now that dividend yield has jumped on you, went from 8 to let's say 12%. So right then, that's a great bargain to say if you have a bunch of cash, jump on it right then and there because you got that stock at a great price, but the dividend yield is very impressive. So now as it goes back up, the dividend yield will go down, even though they're paying out the same dividend in cash, but you just got a better value and a better price point for that dividend, which is being paid to you.
Well, that's
Okay.
good. One thing I would like to know, I don't know if you want to go over the technical part of it. So, like I can go over it. I have the screen. I think you can see my screen now, right?
Okay. Yeah. Yes. Go over the technical. Yeah. Go ahead. Thank you.
So, yeah, because I assume that one thing I would like to know is when is a good entry point. So, I'm just gonna go over what I would do, right? And a good way to look at the stock charts. So I find that it's always great to look at the monthly charts, right? So for instance, you see this one, it's like a really, really nice curve. It just goes up and until COVID, right? So went down at COVID or 2008. So for the rest, everything seems really, really stable, right? And it's always great if you want to draw the trends. You can see looking at the points if there is a good trend that is like going on the stock itself, right? So you see it's always bouncing. So probably a lot of great opportunities. So after looking at the monthly, I try to look at the weekly as well. And the weekly chart always gives you an idea, right? So you don't want to buy a stock when the weekly chart is going down, right? So you just want to make sure that even if you see a good opportunity on the daily chart, you still don't go if it's going down on the weekly, right? Because yeah, you just go against the market
Mm-hmm.
for a time. So if everything looks good for that, in a sense, here I would say you see it seems to have a lot of up, downs, a lot of uncertainty. So eventually, I feel that it's going to go up, right? Looking at the rest of the chart before COVID. So it looks like definitely a great opportunity to buy. So after when you go more into the daily, right? So I'm going to remove this line, which is monthly line. Oops. Let's see if I can do it. And I'm gonna do the same line for the daily as well. So just looking at the trend that is going on right now. And you see that, yeah, basically it's bouncing on two sides. So at this point, we don't know if it's going to bounce. But one thing I would do though, if you want to go into that stock, is that I'm just going to wait for that to go back, right? So, yeah, exactly. So at this point, most of the time it's just waiting and seeing into maybe hourly as well, right? So the hourly tells you even more what you can see. So now looking at it, you see you might have an entry point actually maybe in the next hours. That means tomorrow it might bounce back, right? So you see this is our trend, might bounce back. The thing I would do is that I would wait, because if it goes back up, it's gonna goes back down eventually, and you want to wait maybe for the second up. Then at this time you can buy and enter for I would say maybe technically you still have time, maybe like few weeks, you're going to see that increase if everything goes well, right? So you can see that it's a pattern. Um, that's a good way to look at it. Yeah.
And to add one point to what you're saying there is you guys always want to have your strategy going in and getting out. So with this stock here, what we're talking about, this is a long-term stock. So you want to have, as you do some research and you say, okay, let's say, $28 is a good price you're willing to pay. So as you look at these charts as well, you want to have that target number in your head, because sometimes, yes, at the chart it can be low, but that may not be the true value of the stock. So even though it's low, you'll get it, but you're still overpaying. So you always want to reduce the overpaying as best as you possibly can. So you do that research beforehand and understand as to what price you want to pay for it, and then add this to your strategy. Go ahead, Bryce.
So
Thank
yeah,
you.
so if you want to keep it long term, and yeah, I think for long term it's a really great opportunity, because it went down right with COVID, and it's still down. It's still really really down, right? So there is still totally I would go in for that. Um, I'm just talking for myself. You don't have to do it, but
Yeah, yeah, no worries.
yeah, yeah, exactly. But yeah, I think it's a great opportunity. Other thing, you said BPY, right? What is BPY? Is it?
I believe that was the Brookfield.
Yeah, I don't know this one as well. So same thing for this one.
Yes.
It seems a bit different. You see, like the curve is not as good, I would say. Right? It's it started like 2013, and it didn't go up, right? It didn't go up at all. So I don't know if I would suggest to go into this one, especially like when you see those type of things that it never really went up, and then COVID happened, it just went down. I don't know exactly why they would suddenly like go back to the original price.
These guys are, I believe they're into the real estate and corporate, like the rentals, like Yorkdale Mall and those sort of rent. What these guys are
Mm,
into. So
okay.
with the COVID, no one's shopping, so it's down. But once things start reopening, then they'll be going back up, because that's where their money's really coming from.
Hmm. But the thing I don't know is the fact that they have never been increasing or in a trend, right? So that's the reason why I'm not sure if it would be a good
Right.
investment,
Hmm.
because I don't know why it would basically go back up, right? If if it wasn't increasing before, why it would increase at this point.
Right, right.
So yeah, that's the only thing. I would go like if I would pick, I would go totally for the other one. Um,
Was the other
which
one was that on the US market and this is a Canadian market?
wait a second. No, there is. I think it's the same thing on the Canadian market,
Oh,
but
okay.
yeah. Otherwise, yeah, U.S. market, both of them.
Oh, so it's a different class than stock.
Yeah,
Okay.
but yeah, Brookfield Management um, looks like a good start. Yeah, pretty good. I don't
Okay.
know, Janelle, were you planning to hold it for long, for months or days or or minutes? Oh, okay, long term. Okay,
Mhm.
yeah, seems pretty good. Yeah.
And also one more
Oh,
information to add.
yeah, go ahead. Sorry.
Oh, yeah, one more information tied to the dividend stocks is there's two types of dividend stocks. There's one which they pay a cash value, and there's the other one where they pay in stocks. So the company will pay back through shares. They'll give you more shares of the company. So the advantage with the shares, a company that gives you shares, is very tax efficient, where you're not taxed on it. So you can have, let's say, $1,000 in a company, and every 3 months they're giving you 10 shares, and you keep reinvesting that. So over these years, you could have in money. Let's say you start off with $2,000, and 4 years down the road, you're now at $5,000. You're not taxed on that. So that's the benefit by getting paid through shares, because it's not money, so the government can't tax you on that. And then when you're taking the money out, for sure they can tax you, but then that more or less goes into, if you have a very clever accountant, then they will know to do their job. I'm not a good accountant, so I can't say much on that, but definitely if you want to use that approach, then be sure to add a company that does pay you in stocks, and it will work out in your advantage in the long term.
Have you seen this question, Josh, from Alex?
Okay. Um, I would say there are. I don't know if I'm going to answer it correctly, but there are platforms which you can set it up so it reinvests the dividend which you get from the company, or you do it manually. It's usually better to do it manually. You're aware of it, and you just reinvest it. Um, if that answers your question, Alex, let me know if that was it. Or you can just do your own strategy where, like, dividends usually pay out, um, commonly it's quarterly, every 3 months. And then they have annually, which is once a year. And then they have some which pay monthly. Usually the monthly ones are found in the RET industry. Those pay monthly. And usually for monthly ones, they don't really increase them so much since it's just paid so frequently. Whereas with quarterly dividends, they tend to have more growth. So the actual stock itself will grow, and then the dividend will grow with it, since they have more time to collect the revenues and then pay out every 3 months instead of every month or so. So yes, let me know if I did answer your question, Alex. If not, I'll try to figure a better way to get you. Okay, perfect. Thank you.
Thank you.
All right, go ahead, Bryce.
Yeah, so I don't know if anyone else has stocks. Alex, do you have stocks that maybe you want to, you're looking at right now? All right, ITCB, let's see. Okay, let's see those three ones. You're still seeing my screen, right?
Yes.
Yes.
All right, great. Let's see this one. Wow. ITCB. I don't know what
Okay,
is this
so
one. Mhm.
it's a large bank in Chile, commercial bank.
In Chile? Okay. So months since 2000, I don't, what happened in 2018? Was it because of the value of the money in like South American countries or something? Because it just goes down,
Good
right?
question. I do believe Venezuela and those parts of the world were going through some rough turbulence, and their currency was hit quite harshly.
Mm-hmm.
But I'm
Yeah.
not exactly sure entirely.
Mm. For this one, what I would do if you want to go into this one, I would just go for if you're able to not necessarily day trade, but just keep it for days. Because yeah, the way it goes down, like that's yeah, for long term, it's not gonna, it might not turn pretty good. But at least you can see that if you go for short term, you know, there is still some little opportunities. So yeah, going up, down, it might go back to this line, right? So which is the support. So if it does, it would be a great opportunity to buy and make maybe a little amount. But I don't, yeah, for long term, totally, that wouldn't be yeah, I think it would be a bit risky.
Yeah, because as I'm looking a bit more into their charts now, and one thing I also realize is that they have a high dividend yield of like 11%. So when you're seeing numbers like that, when you look at the dividend yield and the stock itself is like right now it's 388 and a yield of 11.12, they won't be able to sustain that. So it's not going to be a consistent payout. And that's what you want to be looking for a dividend is one where you know every 3 months, hey, this is going to be 25, and you see a little increase every year. So you know next year's going to be 26. With this stock here, their dividend payouts are all over the place. So that's not a good sign when looking for a dividend to hold on to or a company to hold on to. And going back to that high yield, it's a very high payout for the worth of the stock, and that's just telling you it's unstable. So as Bryce was saying, yes, if you want to hold it for a few days, a week, ride the ups and downs, go ahead. But for long term, I wouldn't necessarily um, be holding on to that. Where am I
So
seeing the payout info? You can just quickly hop on Yahoo Finance and you look at the chart, and it will tell you um, the dividend payout, what they were paying. But I look at the dividend yield. That's what I look at, that number. And I look at the price of the stock. So right away I can tell it's unstable just for the price and the yield percentage. I know they wouldn't be able to sustain that.
Josh, can you explain what is the ex-dividend rate?
Pardon me?
Ex-dividend date, sorry. Yeah, ex-dividend date.
Oh, okay, sorry. Yep. So the ex-dividend date is the day in which you must purchase a stock in order to be a part of the next payment. And so an example being today is May 29th, or sorry, June. My goodness, is June 29th. And let's say McDonald's ex dividend is July 3rd. So from today up until July 3rd, you have time to purchase their stocks in order to receive their payout. So one thing you have to keep in mind is that with the ex-dividend date, you purchase it before or on that day, and you must hold the stock for 3 consecutive business days. If you do not hold it for 3 consecutive business days, you will not get the dividend payout. So you can buy it on July 3rd, hold it for 3 consecutive days, and then sell it and do something else, and you will get the dividend. Okay, that's another strategy which some people use, a dividend hopping or so. Is they buy it, hold it for 3 days, and then move to a next stock, hold it for 3 days, and by doing that, you can get a bigger payout when the time comes because you were holding it for those days, as long as you're doing it before that ex-dividend payout day.
All right, thanks.
No problem.
Let's see, the other one Janelle was mentioning, CIM. Let's go over this one. That is a big drop, right? Wow.
Yep, I see that too.
Yeah, this one, it's kind of, wow. Let's see what we have here. I usually try to draw my support. If you know what is support and resistance, basically support, it's where the price is usually bouncing at the bottom, and the resistance is how it's bouncing on top, right? So if you have to draw a line, this is where it's going to drop. Here, actually, it seems to me like, like a great opportunity, actually. You see, if I'm going more into the weekly. Do you know what they do, Josh? Real estate, right?
Let's see. It looks like, yes, they are a real estate trust company.
Okay, yeah, real estate. I don't know why they're that dumb, but to be honest, it looks like a great opportunity. I'm pretty sure it's gonna go back up, right? Looking at it this way, but when that it's another thing.
I would have to honestly, I would have to go into the financials and really look around before I can really say if it's good or not. But with the patterns, maybe it can be a good potential. But as I mentioned, my style is more long term, so I definitely like to look as to what I'm getting into.
Sorry, Josh. I think you're cutting.
Oh, I was saying before I would make any moves, I would just look into the financials of the company, and since you want to hold this for long term, and you want to ensure that your dividends are going to be stable, and the company has a good rap sheet, always look into that prior, and if the cash flow has been great for the years, their debt has been managed very well, and you see that they've been able to maintain a dividend payout and it has been increased throughout those years, then definitely go ahead.
Okay. One thing I would like to add, because usually I like to look at big stocks, right? So like Apple, for instance. Let's see if I can clear that. Oops. That's not what I wanted to do.
And I think Alex had a question, so I'm just going to go ahead and answer that. Do I have a preferred industry? I would say I like to really be in the reds are good. Midstream oil is pretty good as well. And also, yes, into the pharmaceuticals, like the big guys like AbbVie or whatnot. They're a great company to get into. If you do have the money for like Johnson and Johnson, those guys ain't going anywhere, and they've been run very well. So definitely that's a good one to get into. And yes, for recommended writs, usually after the call, what I do is I always put together a little package, I would say, write up and drop in the group. So then you actually have the names and the ticker, so it's easier for everyone to just get in there and look at it. So I'll be dropping that after the call. No problem.
I'd like to add because yeah, Alex mentioned ABBV, right? And
Yeah,
looking at it,
that's AbbVie, I believe. Yeah.
yeah, looking at it seems pretty good. One thing also I always suggest though is that when you pick stocks, it's to pick stocks that maybe you're familiar with, or if you work with them, that's even better because
Absolutely.
like yeah, exactly. It's just easier to understand what they do and what's valuable for them. So I usually pick stocks that I'm customer of. So like for instance, I'm using Uber. So I'm gonna look at their stocks because I understand what they do. Using them not every day, but like on a daily basis. So it's easier to understand the stock, right? And I'm saying that also because my field is also working in tech, so it's really easier to understand all of the process they are going through. So I find that it's always better, let's say if you work with restaurants, to look at restaurants and see what is better, because it's really an industry that you probably know way
Yeah,
better, right? And
that's right. And also to add to Bryce, what he's saying is going back to what I said earlier in the meeting was you're able to understand and see foresight. So example, Bryce being in the tech industry or in the health industry, he would be able to see things which are happening now, which would affect that industry later on. So he would know how to adjust for it. Whereas I could just say, oh, okay, this is cool, this looks good, and I would purchase it, but I don't really understand what affects it. So then if I waited maybe 2 more months because of what the news was happening and this is going to happen, I would have got the stock at a better price or so forth. So just enforcing what Bryce says, it's good to really understand the sector or the industries to which you want to get involved and start growing your wealth. Right, go ahead, Bryce.
so yeah, Alex also mentioned PNG. What is PNG?
I think that's
Oh,
Procter and
Procter and
Gamble.
Gamble,
Yeah.
right? Yeah, yeah, they are doing pretty good. Yeah, looks like a good stock. I actually never looked into them. I have Johnson and Johnson. I'm not sure if I
Yeah.
sold. Maybe I sold. Yeah. But yeah, for long term, looks pretty good.
Mm-hmm.
Only this thing I wonder a little bit. I would wait actually for this one. I would totally wait. Just because of looking at it right now. Last time I talked to you about the moving average. So I'm always looking at the moving average, blue line crossing the red line. And the fact that there is a cross, down cross, at this time I would wait a little bit. Maybe there is a better opportunity. Or even if you wait, you might lose a little bit, but you might probably buy later on. So that is the monthly chart. So maybe wait a few months.
Okay.
And yeah, this is what I would suggest. But yeah, definitely looks like a good start.
Oh, perfect.
Yeah. Any other stocks that you guys wanna take a look at? And it's quite interesting because I'm discovering stocks as well.
Yeah, yeah.
Yeah, exactly. Because usually, like I'm going, I would say with dividends, I'm going with stocks like Apple, right? So
Hmm.
I like, I really, I'm not a big Apple Mac user and all of that, but at the same time, I find that this company is doing really, really good, right? So when you look at, yeah, exactly how they do before COVID, they were just going up like, you know, they were just doing really well. And same thing
Hmm.
after, right after that drop, they're still going up and like if nothing happened, right? So it's
Right.
great. It's great they offer dividends. So it's, like I find that those stocks are really good. They're just really strong stocks. And it's the kind of
Right.
things that I would put like, a good part of my portfolio into them. It gives less risk, but at the same time, the return is not as good as like small stocks for sure. But if you keep it long term, you can have really, really good return out of it.
Hmm.
So yeah, I think that others, Facebook is also, no, Facebook doesn't have dividends.
I'm not too sure, and usually if I always like to say you make money in volume. So
Hmm,
if you have maybe $2,000, or you're starting off with 1,000 or so, then you want to be able to buy stocks which you can at least have, 100 of them, or so forth. When I started off, I mean, I had $500. I work with that, so you don't need to start off, you know, uh, with big amounts. You can start off with little. The key point is, as long as you're starting, and that's the real important thing here. Yeah.
hmm. Yeah, totally. So, well, what, sorry, Gmail apps? Ah, okay, I guess it's the name of the
Hmm.
stock. Okay, let's see this one. This one has no dividends, right? Is there some?
Which one?
APPS.
APPS. I'm not too sure which
Mhm.
that one is.
Software service. Looks great, like, wow. Yeah, especially I like the price, not big stock.
Digital dividends.
Yeah.
Okay.
So yeah, let me see, because it seems to be a bit overbought at this time. What you mean by overbought is let's see. Usually I'm going with the relative strength index, the RSI, and as I mentioned last time, or I don't know if I mentioned it, but or Monica, I think Monica said it, about the RSI. So a good way to look at it, if you want to see, like you see those type of curves, you see that it's increasing a lot, right? At one point, it's going to be too much. So we call the stock being
Mhm.
overbought. Too many people are buying, right? So eventually, it's going to have a correction and go back to, yeah, it's going to drop a little bit. So this is the RSI indicator at the bottom. And you see here at 70, usually people say that it's overbought. So when it goes over 70, it's overbought. And when it goes under 30, it's oversold. So this one at this point is overbought. So we might expect a correction to drop a little bit. So I would go into the hourly chart and look at it, just see when this is gonna happen. Yeah, I would follow really the hourly chart. And just to find this is only to find an entry point, right? So if you want to hold it for really long term, that doesn't matter as much. But if you want to keep it for like a week, 2 weeks, a month, then you rather just find a good entry point. So yeah, that you can get in.
Perfect.
Yeah. Yeah. Another one, MSI. MSI. Oh, Motorola. Yeah, I've heard about them. I think A lot of people are talking about them these days.
Motorola?
Yeah. So,
Yeah, I guess we'd have to look into that to see what they're doing.
oh,
You know,
okay. I think
if they're
Josh is
shifting
out.
into
But
yeah, go ahead.
yeah. Yeah, okay, yeah. So yeah, looking at this company, definitely that's a good one. Wow, that's really impressive actually. Let's see what do they have into during the virus. Yeah, it seems to be a bit like stayed at the bottom for now. I don't understand. So here is my support. I see it's bouncing. Yeah. At this point, I would say for this company, if you want to hold it long term, that seems like a good point. You know, it just went down. It's quite stable. It stayed down. So if you want to hold it for long term for months, then it really looks like a good decision. Other than that, I cannot say much for short term, but otherwise, you know, those stocks are always great to day trade. So if you're into day trading, you might have some great opportunities as it's going up and down. So you can buy, you can also short if you want. But yeah, definitely looks like a great one.
Yep, and talking of also emerging technologies, you have the car company, Nikola Corporation, and they are sort of like going to be competing against Tesla, and so they're starting off right now, and they just got a good order of their electric trucks, which they're going to be producing, and so they could be a potential a good company to watch and get in when they're beginning, because just the way things are going, the future is going to have a lot more electrical vehicles, and that's evident as you see all the car makers, Mercedes, BMW, they're all starting to put together their electric cars because they see that coming. So that's another indicator is when you see these guys starting to shift in production as to what they're doing. When you see other companies, and you know you want to keep an eye out for upcoming companies, and that's when you really sort of research that company, understand the CEO, and really have a good understanding of the industry and be able to foresee what that company is doing, what they can do, and you know then all means if you feel it's great and the price is good, then get in on it. And you want to have that mentality where you're going to leave it alone for five years, right? That's like with Tesla. You bought Tesla 10 years ago, it would have been $17, and now it's pushing $1,000. But you can't day trade those ones. You just leave it alone. So with that, I'm going to write the stock into the group as well, just for everyone to look into it and you know realize it could have some great potential, and go forward with that. Okay.
So yeah, I realized that actually Jackie was talking about the Morneau Chappelle. And yeah, this one is it's one that I really like. I was mentioning before, you know, when you look at the stock, the chart, you see it's increasing, looks good for that. The thing is that at this point, it seems to go into a downtrend on the weekly chart. So, and you see the downtrend when it does lower highs every time. So, for instance, there is one high, goes down, and this is lower, goes down again. You see an upper trend when it does higher highs all the time, right? So this is one high, goes down, higher high, and this is how you see it, right? So there you can tell that it seems to go into a downtrend for the weekly. So maybe I would wait. I would just wait a little bit, see if it's gonna reverse. And if it does, yeah, definitely, it's looks like a good one to buy, right? But yeah, would wait a little bit. And yeah, I think the last one was Cisco. Let's see, Cisco. So Alex said that there was an opportunity in was it in March or yeah, in March. At this point, let's see how they are. Yeah, they look, let's say they look okay. Especially for,
Perfect.
yeah, for long term, looks like a great thing. Yeah, looks like a great one to hold for sure. And now you can see that there might have a turnover at this point. Yeah, really great time to, if you actually want to get more. Just at the same time, I would say just be careful because of what's going on with the market right now. So,
Yeah.
when you look at the indexes, the Dow Jones, S&P 500, they're all going down, right? So, for instance, on my side, what I decided to do, I'm not buying anything. I'm basically just day trading these days. So I'm holding something for a day maximum or 2 days, like so. Not more than that, because I never know when it's gonna just turn and if we're still hearing bad news or something. So, but definitely you see that there is a turnover. So, in a month or two, then if it goes up, that's definitely a good one to hold. Yeah.
Perfect. Yeah.
So, I think that was really interesting actually going over all of the stocks that you guys have and you guys are watching. So, it also like give great opportunities to know about those stocks. And yeah, exactly. So as Alex mentioned, always look at like the indexes. Um, there is the Dow Jones. What is DGI? I think. Yeah, Dow Jones. So always look, see how the Dow Jones is doing, because you see these days it's basically just going down, right? And when it goes down, you can see just it's an index, right? So it takes a lot of stocks showing how it goes. So if it goes down, maybe it's better to wait a little bit and see when it's more stable or when it goes back up. So yeah, anything to add, Josh?
Um, Nothing really on my part. I'm just going to, as mentioned, afterwards I'll put in my two stock recommendations. And as always, be sure to do your due diligence before purchasing any stocks and make sure you have an understanding of what you're purchasing. Apart from that, keep up the great work, guys. And like I said, let's make sure we keep the wealth within the Black community and be sure to empower and share that knowledge so each and every one of us can enjoy that financial freedom.
Yeah, awesome. Thanks. So yeah, every time if you have some great stocks, please share it to the group. It's always great. Like you see, we just found a bunch of different stocks that you guys are watching. So really great opportunities. So yeah, please post it to the group and yeah, I'm gonna post the video as well tomorrow. So if you want to see what we have done together, and I'm also gonna mention all of the stocks that we went through. So yeah, thanks guys, and have a great evening.
Thanks a lot, Bryce. We'll talk to you soon.
Thanks.